No, we are not buying. Our asset allocation or our investment strategy has been for a while now to buy into the dips. We've had a dip a few months ago, which was quite significant, and we would be inclined to sell into rallies because we do think that the trade issue, while it may not destroy the sort of medium and longer term bull market picture or the global recovery, will continue to weigh, especially over the summer months where you also tend to have thin trading. So we would be inclined to sell into the strength.
Would you be selling now, or are you waiting for a bit more room to go to the upside?
No, I think we have a few more days, perhaps a couple of weeks or so ahead of us. The rally that we are seeing right now, or the rebound, if you will, in the U.S. is a continuation. In the emerging space and in Asia, it's more of a rebound. There is a positive anticipation with regards to the earnings season. The earnings expectations are actually quite good. That may keep this rally going for at least a few more days for sure. So I wouldn't be selling now either.
Yes, Mikio, that's one thing we keep hearing, that if you put the trade noise to the side, which is sometimes a difficult thing to do, that the fundamentals are still quite strong. That's certainly what people are saying about the U.S. economy, but also the corporates there too. What do you see, though, when it comes to China? Because even though regionally across Asia the corporate fundamentals have been solid, some are starting to get more worried about the growth backdrop in China. Are you worried?
Yes, I think in China there's two issues with regards not only to China but broader in the emerging Asian space, is that we have the trade issue looming, which let me put it this way: I think it's more likely for the developed countries to reach some sort of compromises. First of all, they're political and military allies already, and they have very similar structures and actually very similar concerns. So I think ultimately the trade issues between Europe and the US, and also between Japan and the US, can be resolved. While it's much more difficult if we're going into a more protectionist kind of world order, so to speak. The emerging Asian economies are the ones that will get hit hardest. So that is a fundamental question mark out there for the medium and longer term. Plus in China you have the ongoing slowdown and the on-off tightening and easing policies and regulatory reform that's going on there, which of course has some short-term costs. So I think we're seeing some of that weighing on China.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.